All right, let's talk to a consumer and trying to understand what really is happening in the Indian market. Subhash Chandra Garg is a former Finance Secretary of India, is now joining us live from New Delhi. Welcome to the broadcast. With commodity inflation rising, can consumers expect price increases in times to come?
See, there is hardly any option for the FMCG companies to hold back price increases. They have no leeway left with many raw material prices rising, including tea, palm oil, and other edible oils which go into it. And so that's hardly any choice. But what the difficulty they have been facing is that there is a demand contraction in urban as well as rural areas, thanks to very tepid growth of earnings in the Indian economy. We had very small growth of 5.4% in the second quarter, and the entire year also doesn't look very bright, going beyond 6.2 or 6.3%. So the demand being absent is constraining the companies, FMCG companies, from raising prices, which is reflecting in their bottom lines and their share prices.
Mr. Garg, now that you've mentioned FMCG, the FMCG markets are very cost-specific and like to play in volumes. Will that strategy change in the face of supply chain disruptions in the country?
Yes, they've tried all tricks. They're cutting down the size of the packs for urban consumers as well, to get as many of them to buy with lower cash outgo at a point of time. So they are trying their best to sustain the demand, even with the lower packages and all. But the overall position being in a difficult space, with consumption growth in the economy being relatively quiet. This year it was 7%. That was not bad that much. But until last year, for 3-4 years, the average was only about 4 to 5%. So despite their attempts to do everything possible, the demand pickup is still not that high.
Mr. Garg, there are concerns about inflation in India and globally. India recently announced income tax cuts to boost disposable incomes. Can this offset the rising inflation concerns?
It is quite possible, because this was aimed at that. But the base of the cuts, it applies to about 1 crore Indians. That's out of 140 crore Indians. So that is, their incomes will definitely improve, their disposable incomes. The big question would be that how much of that goes into consumption, and how much of that would be spent on share market or other savings. Indian middle class has been quite cautious consumer. They have not accept the very, very high end kind of discretionary consumption. Even there have been difficulties. So I think we'll have to watch where does this 1 trillion rupees equivalent of savings, which the tax cut is handing over to them, goes in. We should also remember that even if the entire savings goes into consumption, for a 200 trillion rupees market, 1 trillion amounts to only about 5.5% or so. So it may make some difference, but expecting that it will be a game changer might be an overestimation or expectation.
All right, I've been talking to Mr. Subhash Chandra Garg, who's a former Finance Secretary of India. Mr. Secretary, thank you very much for your insights and for talking to us today. For all the latest news, download the WION app and subscribe to our YouTube channel.